Hello guys and welcome to another candlestick pattern learning video in our candlestick pattern series. So today we are going to discuss about an important pattern that is called a piercing pattern. So this is a reversal pattern, a bearish. Earlier we have discussed a bearish pattern called dark cloud cover, which is there in this series. Those for those who of you who have not seen what a dark cloud cover is, I'll leave the video at the end of this video so that you can go and understand the dark cloud cover first, which is a bearish pattern which comes after a bullish trend. Obviously, every candlestick pattern will have an opposite pattern to it or a counter pattern to it. So, likewise, for our dark cloud cover, this is the counter pattern which is called a piercing pattern. This is a bullish pattern. So, let's let's start and see what this piercing pattern is. So, first of all, this is a bullish reversal signal. This is the very this is a very important pattern because unlike the previous pattern, that is the dark cloud cover, the frequency of occurrence of this piercing pattern is a bit more than your dark cloud cover, and this is also a bullish reversal signal. And most importantly, this is our a two candle formation pattern, which means that in order to identify this pattern you need two candles that forms this pattern. So let's start understanding what it is with the help of a drawing. So as we are talking that this is a bullish reversal signal, which means you need a downtrend before this can before you identify this. So this is must, you need a downtrend before this pattern, only then you will be, we can call this as a piercing pattern, where your first candle should be in red color, and I'll do that in a moment. And you need a second candle where your second candle should be in a green color. Let me draw the drawing first, and then we can change the colors accordingly. So in this, okay, sorry, excuse me for that. Okay, yeah, okay. So this is a two candle formation where your second candle should be a green in color. Let's change our colors. So here we are particular only about the real bodies of this candle, not with the wicks of the candle. You, that means you can have a wick or you can have a no wick, that doesn't matter. This candle formation is a comparison between two candles real bodies. So in this case we have two real bodies here. Let's assume that this has a small amount of wick there. Okay, so the size of the wicks, I'm extremely sorry with that. I'm very much used to pressing the space bar, which is taking me into another instrument entirely. Okay, sorry. So here we have, this is our a piercing. This is a typical piercing pattern of formation, where you have two candles which are coming after your a downtrend, and ideally your first candle must be a bearish candle, which is a red candle, and your second candle must be a green candle. So it is just like it is a partial version of bullish engulfing pattern, where in your bullish engulfing pattern your second candle should entirely engulf your previous candle's real body, whereas in this case you should see the second candle opening, that is opening below the close of previous candle. Like in this case right there, you see we have this opening. If this is a green candle, we have this opening right below your previous candle's close. So that is the first point. And your second requirement is it should be able to pierce into this previous candle's real body. more than half of your previous candle's real body. Let's assume that if this is your half, this candle should close well beyond your first previous candle's real body. Whereas in the dark cloud cover, you see the same in the opposite. Whereas your first candle is green, second candle is red, and that should open above this previous candle's close and then close well beyond this half of this previous candle's real body. So in this case, it is this in a reverse, in a reverse order. So here we have the second candle that is opening with a little gap down after this, and then we want it to close well into this. So basically, this is the formation that you see after a downtrend. Only then this can be called as a bullish reversal signal. And there are three variants in this particular formation. So let's also see what they are. You don't need to remember all these three formations. I'm just telling you for your knowledge. Okay, so if that is your first candle, this is also your first candle, and this is also your first candle, whereas your second candle in this case can be just there. I'm drawing it very quickly without any wicks, so that you just understand the concept first and then get it. And this is your second variant, and this is your third variant. Okay, so all these are three s- variants of your pacing pattern. But in your dark cloud cover, we have only one variant. We don't have any more variants like this. But in this piercing pattern, you have three variants of this. I recommend you to take screenshots in between, so that if you have to revise, then it will be easy for you. So here is your piercing pattern, first variant, where you see the second real body has opened below this close, first candle's close, but couldn't close above this close line. In that case, it is called on neck piercing pattern. It is called on neck piercing pattern. Okay. Whereas your second variant is, it has opened below your first candle's close, but has closed above this first candle's close, but could not reach beyond your second midpoint of your previous candle, or at least still there. So in this, that means this second candle's close is almost near your previous candle's close. In that case, it is called in neck piercing pattern. In this is called in neck pattern. So all these are variants in your dark cloud cover. Okay. Sorry. These are your variants in your piercing pattern. And the last variant is called, and this variant right here, the dark variant, where you see the close almost till your half point of your previous candle, but not beyond that. In this case, this variant is called a thrusting pattern. THRUSTING. This is called a thrusting pattern. So now we know what a piercing pattern is, and we now know that what are those three variants of this piercing pattern. Now you don't have to remember all these three variants, but you should be aware of these three variants. All that is important in this candle formation is your second candle's close into your previous candle's real body. If it is, the more it is closing into your previous candle's body, the more stronger it becomes, and then you can rely on it depending on the level of penetration. It doesn't mean that this is less important, or this is less important and this is less important. Okay, because if these are coming at your any important locations like support or previous swing low, even this can become bullish where in those cases I recommend you to take a confirmation, that is a next candle a close above this line, above this line, above this line, to get into a trade. But usually, even these formations are important. It is not that only if you see a close beyond this it is a piercing pattern. Even this can be called as variant of piercing pattern, which is called a non neck, and this is an second variant of your piercing pattern, which is called in neck, and this is your last variant where you're seeing a close almost near the half but not beyond that. In that case it is called a thrusting pattern. So I hope you have taken a screenshot of this. So I'm removing these drawings, and so that we have bit of more real estate on the screen to talk about this candle further. Okay, so again, to just summarize, this is a piercing pattern which is a bullish reversal signal which comes after a downtrend. Okay, so you need a downtrend to this, need a downtrend in order to validate this, and this is a two candle formation. Now there are certain factors which will strengthen the importance of this piercing pattern, which are first one is volume. So if you see more volume on your second candle than your first candle, in that case this becomes even more important pattern. And your second point is location. So if your pacing pattern is coming at your support level, or at your any previous swing lows at any important zones, then this increases the importance of this piercing pattern. And the last one is the movement. If you see this piercing pattern after a very fast movement, and that is occurring at an important location with a higher volume on the second candle, and that is coming after a very fast movement towards the down, in all these three cases it will even increase the importance of this piercing pattern. So these are the three factors that affects or improves the importance of this candle formation. And the next point that you should remember is, whenever you see a candle formation like this, if you're seeing for this candle formation for the first time, imagine that you don't have any support on your left or any swing lows where this is happening, but this is the first reaction where your prices are seeing this pattern and also seeing some movement after this. In that case, this will also become as a support area. So you can take the lower portion of this candle to be exactly precise. You can take the wick portion of this particular pattern, and which becomes a support area. So this defines candle defines support areas. So now you know what a piercing pattern is. You know when to validate it. That is after a downtrend, and it is a bullish reversal signal, and it creates a support area, and the three other variants of this piercing pattern, and also what are the three factors that improves the significance of this reversal pattern, piercing pattern. That is volume, location, and movement. Okay, so with all this information now, I hope you have understood this concept fairly. So now let's get into, okay, before that, let me tell you the importance of this candle. The occurrence of this candle is more than your dark cloud cover. That is the other counterpart, the counter direction, the counter trend, the counter pattern of this piercing pattern, that is dark cloud cover, is very rare to see. But whereas piercing pattern can be little, uh, it can be appearing more frequently than your dark cloud cover. Okay, and because it requires a gap down opening, this will you will be not able to see this pattern more often on your intraday charts. Instead, you can see this on your daily charts because of your gap up openings and gap down openings. Okay, so we are in bank nifty's chart already, in a daily chart of bank nifty. So let's check where this pattern is appearing, so that we'll understand it in our bank nifty chart so that you can also do some case studies depending on this. So this completely is a one day. Okay, let's see. All these are one day candles. That is, every candle here is representing one day in bank nifty. So let's see where all do we have this pattern appearing. Okay, so here we don't have see, here we have that is a bullish engulfing pattern. It's not a piercing pattern. Let me zoom that a bit more. Yeah, this pattern is a bullish engulfing pattern because your green candle is completely engulfing your previous candle. So that is an even this is an engulfing pattern. That is why you are seeing this moment. And those who have not seen what an engulfing candle is, we have a very detailed explanation on that engulfing pattern as well in the same candlestick pattern series. I recommend you to go ahead and watch that as well. Okay, so now where do we have? Okay, this can be your pacing pattern, but it's not because your second, this green candle opening is not below your previous candles close. So this cannot be your piercing pattern. Okay, so this is a variant of piercing pattern there, and this is a variant of piercing pattern there. This is an on neck pattern, and this is an in neck pattern because this is opening just below the neck, and this is opening well into the neck. So this is in the neck and this is on the neck. So these are the first two variants of our piercing pattern. So you see where this is happening. This is not happening at any previous significant reaction before, but still it it was able to generate some movement at least till there. From there it was a momentum of say 1267 in a bank nifty. That is great, right? Okay, but let's check for even a better formations. Yeah, you see right here. Let me enlarge that a bit. Okay, so right here, this is your another variant of piercing pattern. This is your second variant of piercing pattern. From now, let's forget about whether it is in neck or on neck or a thrusting pattern. All we say is a piercing pattern. So this is a variant of piercing pattern where you see the opening of this green candle is well below your previous red candle. This opening is well below that, and it has closed above this, but not very close towards that. But still, it's fine. But still, it's fine because see, it is coming right there. Okay, we'll talk about this is also piercing pattern, but we'll come to that later. But you see, it is exactly happening at this blue line level where this becomes your piercing pattern and you have seen some downwards momentum there. Okay, here you have a downward a momentum there. So it's ticking all the boxes, and now we can identify this as our piercing pattern. Now that is your piercing pattern, after which, and it is also coming at an important location. Okay, from this reaction. Okay, and look at the kind of movement there. Okay, let me tell you also. Okay, we didn't discuss about where to enter and where to exit, right? And what about your stop loss? Okay, so in this variant, always you will always enter into your second candle's closure. That is, when this second candle is almost getting close, you should jump into this candle and keep your stop loss to the lowest point of these two. If this candle is lowest, it can be this, or if this candle's wick is lower than your second candle, then that can be your stop loss a bit below that. And you can keep going. We'll do a separate dedicated video on targets as well, but before that, there is a lot that you need to know about candlestick patterns and several other technical analysis topics. Okay, whereas in this case, if you are starting from there, look at the reaction. Even if you are here, it is 2,882 points in a matter of 17 bars. That is 25 days, including holidays, 17 working days. And you see, in that month, it has moved 6,900 points in Bank Nifty. And you see, okay, in 2 months after that moment, you have seen 9,153 points in Bank Nifty. Okay, all that is because of your piercing pattern there. And the interesting part is again here. Okay, just below the before, see, this is your piercing pattern, right? See, even here, this is your piercing pattern right there. Right there is your piercing pattern, and on the left side you see certain a couple of a couple of reactions there. You see a couple of reactions from there. So there is some sort of rejection from that point, from that area. So even this is your piercing pattern, which is ticking all our boxes. In fact, this is a pure piercing pattern because it is the green candle has closed well above your previous candle's real body. So this is our third example that we are seeing in a bank nifty's chart that has also created in and momentum of, say, if you enter there, you are seeing a 3200 points in 7 days, 7 working days, and you are seeing a momentum of 5500 points. Now you understand how important this piercing pattern is with these examples. Now I'll leave it there, and I want you to see again here there is an piercing pattern. See, that is what I was talking about. The occurrence of the frequency of this candles, uh, this particular formation is very common on a daily chart, especially if it is coming at a any reaction. See, this is a kind of reaction from where prices have started going up. At that is the same place you have seen a piercing pattern there. Okay, in fact, this is also a piercing pattern, and we have a downtrend there. So that led to a momentum of, say, 3,500 points in bank nifty. That is in a 12 working days. So you can do, I'll leave the rest of the back testing for you. I recommend you to do with any candlestick pattern for that matter. I recommend you to do a thorough back testing. At least do back testing. If it is a daily chart, do a back testing for an year, or if it is an intraday chart, I recommend you to do a minimum back testing of 2 months. Only then you should be able to use this pattern in the live markets. And after that, I don't recommend you to directly jump into the live markets and trade uh, a huge number of lots. No, that shouldn't be the case. You should always trade one lot until 3 months. If you are consistently profitable for the 3 months using any of these candlesticks patterns, only then I recommend you to increase your lot size. Till then you maintain only one lot so that you don't over trade. Always keep your emotions under control, and also watch our post market analysis video. We do post market analysis video on bank nifty on an intraday time frame of 5 minutes, where we completely dissect the price action for that day and then understand in detail about the price action, that so that we can learn from the live market. Every day the market gives us a chance to learn. So you can also follow us on that series, on post market analysis series. I hope you understood the concept for today. I strongly recommend you to go and don't worry about the three variants. All you have to remember is the gap down opening of the second candle, a previous downtrend, and your closing should be into the half of more than half of your previous candle. But there can be a close below this previous candle's close. There can be a close just above that, and there can be close just below this also. Those are the three variants which we spoke about. If you have not understood, just go back and play the video from that part, and try to understand and take more screenshots. And we have these three factors which improves the importance and the signal. Sorry, not that. These three are the factors which will improve the importance of your pacing pattern as well. Okay, so all right, for this video, let's catch up in another video. Okay, most of you in our channel are watching our videos without subscribing, so I request you to kindly subscribe into our channel, where we learn about stock markets in a more meaningful way possible. Okay, so thanks for watching, and please do subscribe to Common Man Daily Trading. Thank you.